Good evening, guys. It's Saturday, May 27th. My name is Dave Coker, and this is Talking About Finance. And all right, this is the best part of my weekend. I get to chat with like-minded souls, connoisseurs of cash flow, disciples of dividends, portfolio partisans who refuse to accept the lies, the damaging and not to mention expensive lies, that somehow you can time the market, that somehow you can trade the market. No matter what it's called, technical analysis, momentum trading, swing trading, no matter the time frame, day trading, weekly trading, monthly trading, it does not work. And we know this for one simple reason. None of the so-called experts, the self-appointed gurus who offer to teach us their secrets for a fee, will ever accept a public challenge, a very simple one. Name your trade when you put it on. Tell us the ticker, tell us the date, tell us the time, and tell us the price when you opened the position. And then tell us the date, tell us the time, tell us the price when you close the position. Do this publicly so we can verify your claims, and we would gladly buy your courses, your newsletters, whatever. Instead, all they do is they talk about profits, they talk about gains, they measure these gains in the thousands, the tens of thousands, the hundreds of thousands of dollars in a very short period of time, using a system they decline to explain. And be careful. Now those charlatans are claiming that ChatGPT and other large language models can successfully trade, but only if you pay for their expertise. But we know the only sure way to get rich is slowly. You need to invest for dividends. And we know building wealth takes time. But we're willing to wait. Slowly collecting dividends. Reinvesting dividends. Building wealth. We know the wealth train moves slowly, but it moves surely, and we're content to wait. But while we're waiting, let's talk about finance. The S&P 500 closed the week up about 32 basis points. Three sectors outperformed the S&P 500 index. Information technology, my God. We'll talk about that later. Communication services and consumer discretionary. And 8 sectors underperformed, specifically energy, real estate, industrials, financials, utilities, healthcare, materials, and consumer staples. And this week we saw big tech, actually a subset of big tech, dominate the markets, especially as rumors spread about NVIDIA's earnings. And then the news broke about their earnings. Yes, it was a blowout quarter by any measure, but we're seeing a rather bubbly market at this point, so be careful there, guys. The VIX traded down to 17.95. It opened the week at 16.81. Traded a little bit north of 420 on Wednesday before retreating. Remember, guys, until we see that VIX spike up to about 40, I am totally uncomfortable about deploying significant capital and opening new positions. The market is still uncomfortably odd. I've been pushing my research notes out to my investment banking clients pretty much daily over the past 10 days, and a subset goes on Medium. So you can look at them for free. All you need to do is go to Google News, enter Dave Coker, and you'll be able to find them. So go to Google News, type Dave Coker in, and you can see my articles that I post on Medium and a few other sites. They'll all be collected there. The 10-year note closed the week at 3.80%, up about 10 basis points week on week, down about 20 basis points year to date. Oil closed the week at $72.77, up about 1.5% on the week, and down about 9.3% year to date. And since yesterday was Friday, you already know how I started my day. I get up every day around 0400. And yes, I bought Bitcoin. Yes, I bought Ripple. I'm keeping the faith, guys, about Bitcoin, especially because we're closing in on the halving. So we'll have to see how the price behaves before that epic event. But enough about me. Let's see what me and my buddies, 50 or so finance professionals from all around the planet, were talking about last week. And as usual, we had a lot of fun. And in case you didn't know, we are Global Wall Street. And between Telegram On our personal networks, we know everyone, or we know someone who knows someone on Wall Street or in the city of London. This week we're on Wall Street, we're reporting from Shanghai, we're reporting from Mumbai, and we're reporting from Chicago. And absolutely everywhere else that matters. So let's go. 7 slides for 7 days. All right. First of all, this is our manifesto, guys. I'm really glad to see this gentleman. Tips about investing in stocks? Nah. Who cares? No one wants them. Investing in stocks that pay dividends? Oh, yeah. And if you select them properly, if you look for dividend aristocrats, or if you look for stocks like I enjoy, like I like to look at, exchange-traded funds, shares and ETFs that target high yield, my gosh, you've got some good returns there. And there's a lot of babble, oh my God, a lot of babble in the financial media. And yeah, this is about par for the course of the news you're going to get on financial media. Guys, I don't pay attention to it. Aside from Bloomberg Radio, which I tend to listen to 24/7, and if you ever see me walking down the street or on campus or in a bank, I've always got earphones in and I've got I've got Bloomberg Radio on, and I'm listening to live market news. Aside from that, guys, it's just drivel when we look at these other sources. CNBC, I can't name them all. Yeah, you got to be really careful. They're good for entertainment value, but not much else. And things have changed in the markets. I'm writing a research note about how we're saying goodbye to Tina and hello to BARB. Goodbye to the acronym, there is no alternative, meaning no alternative to stocks. And hello, bonds are back. So yeah, when you can start to pick up a risk-free yield around 5% or higher, yeah, you really don't want to be owning stocks in that environment. Doesn't mean sell, guys, but any new capital I get, I tend to deploy more on the fixed income side. Although you know what I like high yield, so I'm not really moving into treasuries at 5 to 7%. I'm moving into high yield at double-digit percentages. And the other thing I like about most of the high yield ETFs, exchange-traded funds, they pay monthly. So my God, you can really apply compounding in your favor. And this was pretty interesting, I thought, that the Economist actually said about, talking about meme stocks, and they're talking about whether we should regulate them or not, enhanced regulation. No, please don't do that. Please don't even think about that. The Wall Street guys are rattled because they've been made to look bad by Wall Street Bets guys on Reddit and a few other subreddits. See, yeah, no, you don't really want to be threatening to regulate this sector especially heavily. That's total garbage. They made some money. They made established Wall Street players look bad because those guys were offering advice on their book, based upon what they held and how they stand to profit if you listen to them. Whereas Wall Street Bets did the exact opposite. Absolutely incredible. Yeah, I love you guys. You're fantastic. I read you all the time. And this is really interesting because, sadly, we know when people get paid, and it's really, really too bad. And I used to run something called the Wealth Class before pandemic. I am getting lots of people bugging me to relaunch it. I may. The thing is, when people get paid, typically they spend a lot of money. And yeah, then they're looking for what organs don't humans need. Yeah, I don't know. I guess you got 2 kidneys for a reason. You got 2 eyes, 2 corneas. I don't know what else you could do. I mean, I don't know, sell some skin, some hair. I don't know. It's probably better to come up with strict financial plans, budgets like I do. Track the budget, control the spending. Don't even pay attention to how much money you make. In fact, don't look, never know. That's my philosophy. I really don't care. All I care about is lowering my cost of living. That's all I care about. And I wrote a Medium article about this last week sometime. So check it out. You can see the things that I do, constant steps that I do to try to reduce my cost of living. And I measure it, guys. I measure our cost of living annually, monthly, weekly, and daily. I know exactly how much it costs me to live every day. Yeah, you need that level of information. And regardless, if you do this, you'll have spare money. You'll be able to invest. You'll be able to buy some Bitcoin. Oh, and this was so bizarre. I remember, I've been preaching Bitcoin for a while talking passionately about Bitcoin, about the advantages of holding the cryptocurrency. And, people are a little weird. I got so little interest in 2018, 2017, going way back to 2014 when, I first got hooked on it and started buying it and talking about it. And I distinctly remember a university I worked at until 2022, they couldn't give a toss, those academics, about Bitcoin until it pushed north of 60,000. And then they were all crazy. Yeah, don't make that mistake, guys. Do what I do. Buy Bitcoin at regular intervals. I prefer weekly. You could do it monthly. You could do it quarterly. You could do it yearly. Although you're probably better off doing it maybe monthly at the highest or the lowest frequency. I don't think you want to be buying Bitcoin once a year or even, twice a year or once a quarter. I think once a month is probably optimal, unless you're a maniac like me, but I'm not the worst. One of my buddies buys it every day. I don't know about that. It's a little crazy for me, but it works for her. So fine. Yeah, she's good. She's cool. And finally, guys, this is the first rule of Bitcoin. I do tell people I've never sold Bitcoin. Technically, that's not true. I've made 4 small transactions just to test the pipes in case I wanted to sell. Because back when Bitcoin was north of 60,000, I've got so much of it, it was really distorting my overall financial holdings. And I thought, and at the time I was looking at a property up north, and I was thinking, yeah, sell some Bitcoin, buy that property, right? And it didn't come to fruition, although I got the hooks, the pipes set up now, and the relationship with an exchange, and I can definitely move Bitcoin anytime I would like to, but I don't want to. Here's why. Unless I took the Bitcoin I bought last week or maybe last month, if I sell Bitcoin, I've created what's called a taxable event. I will own capital gains tax on it. And I don't like to pay taxes. Or let me rephrase that. I don't like to pay unnecessary taxes. I don't need money. Why in God's name would I sell Bitcoin now and give the government some money? It ain't gonna happen. So yeah, guys, the first rule of Bitcoin is we never sell Bitcoin. You got it? Think about it. Buy and hold. And then when you're 90 or 100, you might want to sell a little. Maybe, but maybe not. That's it for this week, guys. You're going to have a wonderful and awesome week coming up. Although I know New York is closed Monday. That is terrible. Actually, I shouldn't complain because the UK is closed as well. Yeah, I like to work, so I find that terrible. So, yeah, I can work at home. I can do other stuff, but it doesn't matter. But you're going to have an awesome week no matter where you are. Just set some money aside, start to invest slowly, buy dividend-paying stocks, buy some cryptocurrency, and if you're liquid, rental property is radically cool. Thanks for your time, guys. Have a wonderful evening.